Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service financial services firm headquartered right here in Boulder, Colorado. I'm recording this on a Friday afternoon after a Wednesday and a Thursday that was pretty newsworthy in the unmanaged stock market indexes. The Dow went down about 1,200 points. I had just sent out a newsletter today after getting it all edited, etc., with a video that I had recorded earlier in the week before that kind of newsworthy event happened. Let me just kind of comment on that, because the last thing I want to give an impression is that I'm Baghdad Bob. Remember that guy from the Iraq War that he was down the street, the Allied forces were destroying Baghdad, and he was like, everything is wonderful, we are winning, we are completely devastating the invaders, when of course it was completely ridiculous. He wasn't living in reality. What's interesting is our own mental emotions that we bring to the relationship, a relationship with money. And the reason why I say that is, let's just talk about the Dow, for instance. It goes from 20,000 to 22 to 23 to 24, all the way up to 26,000 points, okay? And one thing that's interesting to me is when it goes from 26 to 25 very quickly, a few people might say, gosh, maybe we should change our strategy. Well, the answer is it was at 25 just 3 months ago. You didn't want to change the strategy then, so it's the same thing as it is right now. I mean, just because the market has gone down quickly does not mean it will continue to go down quickly. It does not mean that it will rebound, very quickly. Okay, that just doesn't compute. And why would we change our long-term strategy based on a few days, on short-term data? It's a recency bias. That's what we call it in the economic world, is a recency bias, where you weight more information that's right in front of you than really the deeper and longer-term data. Because frankly, the data is no different today than it was 3 or 4 days ago for the underlying health of the market, and the reason why you, in my opinion, should have long-term investments. If you don't believe that 2 to 5 to 10 years from now, the market is going to be higher than it is today, why are you having any investments? And you should have made that decision prior to the last couple of days, because the last couple of days gives you no useful information. So I think it's really important to remember that. However, it's always difficult, and I might advise this, is that whenever you get into an argument with your significant other, your sibling, or whoever it might be, it's always irritating when you say, hey, just calm down, let's all take a deep breath. Why? Because the other person it's pandering to, it's talking down to them. That's the last thing they want. You can guarantee that you've just extended their anger for another 30 minutes. And so I walk a fine line when I sit here and say, wait a second, let's just calm down. Let's keep the big picture in mind. Let's keep diversified, because you might be emotional right now. You might say, wait a second, I want to feel this pain. I want to feel concern. And all I'm here to say is, the only people who are happy about something like this are the news media. I mean, it's sort of like bad news. The only people who are happy is the weathermen and the news people, because now they have something to talk about on TV. If you have a perception that in the equity desks and the money management, where the professionals are all panicked when the market goes down, you're just wrong. I'm just telling you. I've been there. That's kind of some of my upbringing. And I'm just telling you, they're just like, yeah, okay, we got it. We just stay the course. We know what's going on. These are the professionals. The people who get concerned are the news media and perhaps some investors. And what I want you to be is the smart money, which is cool as a cucumber. Okay, nothing has changed in the last week to change what I've said earlier in the week, or when it was 25,000 in the Dow just 3 months ago. There's nothing different. As a matter of fact, things look better now than it did then. So if you didn't change your strategy 3 months ago, 6 months ago, 12 months ago, why would you do it now? Okay, it makes absolutely no sense to me, and I want you to be the smart money. So that's it. If newsworthy volatility happens, I'll continue with these videos and these newsletters, because I want you to know frankly, from someone who has no vested interest in getting all kinds of ratings, Nielsen ratings. So anyway, Mike Brady, Generosity Wealth Management, 303-747-6455. You have a great day. See ya. Bye-bye.